Hey everyone, Holly and I are back to talk a little bit about financial planning and how the world and the industry that we're in has evolved over time, and how I ultimately think that's really to the benefit of our clients, specifically trade related businesses. So Holly, you want to kick us off and just tell us a little bit about what you see in this on this topic, and then we kind of go into the specifics of it.
Yeah, I think there's a couple of things. One is just differentiating between what financial planning is and isn't. And I think there's a tendency to think of what we do in a certain way and really helping business owners understand what is different about financial planning versus what they may be used to. And then it's just how financial planning as an area of consulting and advice has changed over the decades.
Yeah, and I think it's going to be important for us to define those terms, because planning now has become one of those things where it could mean a lot of different things. There's a lot of people that are in our orbit that do similar things to what we do, and they may define it a little differently. And so I think it'd be important for us to get into really what that means. But let's do a quick history lesson. I don't want to go too much into the weeds on it, but let's do a quick history lesson on the financial industry in general, because I think it'll give everybody a good insight to where we are now. But I think originally, our business started probably from like a product-based insurance or mutual fund kind of a sales cycle kind of a thing, where the person that was doing the planning for somebody, they were selling a product, but a part of that came some financial advice. That was just a part of the deal, but the transaction was really tied up in some kind of a financial product. Do you think, do you feel like I've articulated that well? So that was maybe like the genesis of our industry. Yeah.
Well, I think you could even rewind a little bit more than that. I think a lot of times people think of us as stockbrokers.
Oh,
But
yeah.
I still hear people use that term occasionally. And a lot of the original financial advisors did that. They would call people and have stock recommendations for their portfolio. And that's how people used to interface with their financial advisor. And so it's evolved from that to mutual funds to overall financial planning. And even some financial advisors back in the maybe late 70s, early 80s were seen as tax planners, where they would really help come up with tax shelters and things like that for clients. So it's morphed and changed and evolved a lot over the years.
Okay. Yeah. Well then, okay, now let's get into when like we graduated from like, okay, here's here's the process. It's, we have some product here, or, I'm picking stocks for you, and it's all transactional, transaction based stuff where a client isn't paying a fee directly to somebody, or they're just participating in some kind of a purchase, and then the advice comes along with that. Now let's graduate to the time where the CFPs, became popular, and people were paying for the plan. And I want to differentiate between, like, I think the genesis was a plan versus where we're going to go is planning. But let's talk a little bit about that. And Holly, you've been doing this for almost 40 years now, I think, right? 36. Okay. So she's 36 years in. So she's seen a lot of this. It's important because she's seen a lot of this evolution. She's lived it. When did you first get your CFP?
1991.
1991. Okay. So yeah, that's way back before most people even heard of that. So tell us a little bit about when planning first came out, or doing the plan. Like, what did a plan look like when a client hired an advisor to do a plan? What did that look like?
The financial plan was all about the binder. And it's
Okay.
all about this thick pile of paper.
Okay. Yeah.
And, they would come in and, we would put this very illustrious report together, and we would rifle through that with them and give them the high points. And then I'm sure they would go back home, put it on a shelf, and it would gather dust from there.
Okay. Okay. Yeah. And the key would be they probably just, they got what they paid for, right? Which was a plan. So, how many times did they come back and want to redo this process?
Well, I always tried to make it a very continuous and integrated process.
Okay.
One of the things I learned pretty quickly, Andrew, when I first started, we use software for some financial plans, but we did some financial plans with a little booklet where we would handwrite and hand calculate certain aspects of their financial plan. If we were doing a more basic plan.
Okay.
So,
Yeah, yeah. Did you have an abacus on your desk too, you know?
um, but eventually I figured out, oh, if we have them sit in the meeting where we look at the software together and we start making changes and tweaks to their financial plan so they can see if we change this variable, it has this impact where they're part of the construction of it.
Yeah, yeah.
Light bulbs went on, like I think really felt empowered and they felt part of the process and they understood some of the engine underneath the surface. And that became very powerful. So we weren't just here, let's take your information, we'll input it, we'll come back and deliver this thing to you that looks very impressive. And at first, when I heard that concept, I was like, well, wait a minute, we're showing them how the watch is made. Now, are they even, if they see all of that, is that really going to be valuable? But
Mm.
actually, it was more valuable because now
Yeah.
they saw us as leading them and coaching them through a decision making process. And they were part of that and they owned the outcomes. And so then when we would sit down and go through advice, it wasn't a surprise. They were,
Right.
they understood where the advice was coming from.
Okay, gotcha. Okay, so we see the evolution from the binder, that has these projections and maybe they have some value, but they become out of date very quickly because they're all just based on a lot of assumptions, right? And then there's these recommendations and maybe they get followed through with, maybe they don't, to something that's a little more consultative, where you're involving the person in these decisions and they're helping you build it and there's more ownership probably on both sides to that process, and then that leads to people feeling confident and good, and then they want to continue to do this thing, right? As opposed to like, well, I got the binder, like I don't know what else we need to talk about, see you in 30 years kind of a thing. We have a little bit more of a consultative relationship. And I'll tell you what I've seen is I've seen like a change of like financial advice. A lot of times it used to anchor around retirement. So those binders that you're talking about, they would have projections that would go to your retirement date. Like here's when you can retire. And here's how much money you need to have or how much you're going to spend. There's just tons of assumptions that really hard to pinpoint what's going to happen in the future. Am I going to make more money? Am I going to make less? What's inflation look like? Asset price is going to do. Very hard for us to know all these different things, right? But it's like we're always trying to correct toward that date, which is I think is valuable, and some people want that. So that's a big part of what we do for people. But I think what I've seen is the change of anchoring around retirement to anchoring to the present. Because people really, I mean, what I hear the most is how am I doing right now? Like what can I do right now? Are there changes I need to make now, and anchoring around what's happening in the present versus in the future? And that's not that that's unimportant. It's just that we're anchoring around different place. We're anchoring around what's happening right now and trying to come up with numbers and metrics that are meaningful for today,
That
right?
makes sense. Yeah.
Yeah, and then you can have the advice centered around that. That's really what I've seen our industry change, and I think it's been better for clients. I think the outcome's better. People feel like they're getting more for what they're doing for their for whatever they're paying. I think it's been a very positive thing. So why don't you talk a little bit about like specifically for people in trades related businesses, like what's the reason they should have an advisor in the works as a part of their advice team if they've got their attorney and their CPA. Like, what are some things that you're bringing or things that you're doing for people that own a trades related business to move the needle for them and give them some value?
I think part of the value comes from the shift that we've seen over the last 20 years of the complexity of tax law. And what I mean by that is people used to think of their CPA as like that central quarterback. Now, a lot of CPA firms offer those services too, but a lot of times people have a tax advisor and they're expecting their tax advisor to do that. And the tax advisor, frankly, is pretty inundated with just keeping up with all the returns are needing to file the normal deadline of April 15th. And then there's the extension of October 15th. And there's the corporate filing deadline of September 15th. And so they're always under the gun. And of course, tax law has gotten bigger and bigger and bigger over time. And so it's pretty much all they can do just to stay on top of making sure that people are in compliance with their tax filings. And so over that period of time, I think financial advisors and financial planners, it's opened up an opportunity for them to help quarterback and guide the client, maybe with the CPA. The CPA could still be the lead advisor, but in some cases that there's a void there, where they need somebody to sort of hover or helicopter over their entire financial situation and see what they might be missing or where there could be some opportunities to do something different. And I'll give you an example. Think about, you mentioned trades related businesses. If let's say you have a general contractor and you have all these subs doing different things. And, maybe this sub is doing a project over here that relates to another piece of the work. And there needs to be some integration. There needs to be some communication, maybe it's scheduling, maybe it has to do with overlap of the job itself. But, that applies to what we do as well. So, for example, I had a client who owned an S Corp that he had converted from a C Corp. And he had done that a couple of years after he had gone to an estate attorney and set up wills, trusts, and things like that. And then he moved shares of his business into the trust. And he did that to create a mechanism to help his family if something were to happen to him. He wanted to make sure that there was some kind of overarching mechanism and trying to avoid probate and so forth. But what he didn't realize is when he did that conversion from C Corp to S Corp, that created a problem because trusts, if they're going to own S Corp shares, there's an election language that needs to be in that trust. And so I was putting all these pieces together and I found out about the conversion. I looked at the estate documents and saw that there was not that provision in there. And so I said, you really need to go back to your attorney and get that updated and revised. And he, of course, wasn't talking to that attorney on a regular basis. So that awareness wasn't there. So that's just one example of how, that hovering over all the different details of the financial situation can a lot of times bring a lot of very valuable advice to avoid a big problem down the road.
Yeah, okay. No, that makes a lot of sense. So you kinda have your CPA that everybody, I mean, you have to have one, you have to file taxes. That's just something that just comes with the territory, and they're overloaded, and they've got a full slate of just being able to file taxes. A lot of what they're doing is in the review mirror. You're saying what advisors can do is they can be more proactive, and they can be that kind of that unifying engine among the advisors to make sure the left hand knows what the right hand is doing.
Exactly.
Yeah, yeah, okay.
And we
Mhm.
also make sure that the lines of communication are open between all the different disciplines, whether it's the legal division, the tax division, their banking, their insurance.
Well, one thing I've noticed you haven't said yet, and we're almost 17 minutes into talking, is you haven't talked about investments at all, like, and I think that's where most people think of a financial advisor is they think of an investment manager, but it sounds like you're describing something completely different or other things that go along with what an advisor can do, because I think what we do is much more than that. So you want to elaborate a bit?
Investment management is certainly important. The analogy I always like to give is it's kind of like if you're planning a trip, you're certainly going to buy an airline ticket to get you there. And the investments are really the engine to get you where you want to go. If you're a corporate executive, that's the way you're going to save for retirement. But for business owners, that's not the only way they're going to build wealth. Their company is part of their portfolio.
Mhm.
And we've got to look at it as that. And so, what can we do to help them manage that part of their portfolio as well and help them figure out what are the things they need to be doing to get things organized and, that are not just related to investment management. Certainly, if there are investment management functions that we can do for someone, or if they sell their business and they need help with that, we're certainly there to provide those services as well. But a lot of times people don't realize how much work can be done by a financial planner well in advance of that.
Yeah, absolutely, absolutely. And I think what I've found, and I've done this through interviewing interviewing construction business owners, is asking them like, "Hey, what do you want from an advisor?" And the things that we hear over and over again are, "We want somebody that's proactive, that's going to bring me ideas that I don't think about, right? And I want somebody that's going to stay on top of things for me." And I mean, and make it simple, right? And none of that has to do with it. Most people might think that when you think about your advisor, it's like all about your investment returns, or you know how much you're saving on taxes, and those are important metrics, but there's so many more intangible things that are harder to measure. And that's really when people are asked what they really want, is they want a sounding board to throw ideas off of. They want somebody that's going to be proactive and bring them things, and they want somebody that's going to make things easy and save them time. So the value of our business has really gone from investments products to these other things, right?
Yeah.
Which I think is great. I think that's what people want.
No longer stockbrokers.
That's right. Yeah, no longer stockbrokers. Yeah, don't call me to place a trade. Yeah. um. Anyway, well, I think that pretty much wraps it. I think we had a good talk about the history of financial planning and how it really fits into how construction owners can take advantage of the financial advisor. So yeah,
Yeah,
it's good talking.
think about how to work with someone like ourselves.
Yeah, absolutely. All right. All right. We'll look forward to talking to you next time.
Sounds good.
Have a good one. Bye.
You too.